Mortgage Patriot Nation, unite. In this video, I'm going to show you something incredible, how to get the lowest possible mortgage rate at any given moment. In other words, if you're going to try to buy a new home, whether you're trying to maybe refinance your existing home, how do you get the lowest rate? Well, I'm going to show you the four driving factors, the four most important factors that play into lowering your rate. In fact, the fourth one, you want to stick around to the end because I don't think anybody else is going to show you this, and I'm almost afraid to go down that path, but I'll present it to you anyway. So all this, of course, is to lower your monthly mortgage payment and enjoy not just thousands, but tens of thousands of dollars of interest savings over the life of the mortgage. So if that's of interest to you, let's kick off this rodeo right now. Hi, folks. I am the Mortgage Patriot, Kevin Fagan, on your side, nestled here in the Hill Country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So again, a very interesting topic and very important topic because we're talking about how to get the lowest rate possible whenever you shop for a mortgage. Again, be it purchase or refinance. So as I get into that content, if you would hit the like and subscribe below, it really helps me build my YouTube content. I've done a lot of great videos on when to use certain types of loans, what is the best way to minimize your cash to close at closing, those types of videos, a lot of educational videos. But here we're going to talk about specifically, how do I get the best deal, man? How do I get the best deal on the street? So let's get into that content right now. So let's go into the flow of this video. I promised you the four most determining factors, most driving factors to reduce your mortgage rate at any point in time. Those are, number one, the level of your current credit scores. Number two, your ability or inability to shop rates with different lenders. Number three, the use of buy downs, what we call mortgage buy downs, to pay down the rate. And lastly, one that I didn't want to talk about, commissions from loan officers are negotiable. Wow. Okay, let's break down all those right away. So let's talk about credit scores because that's the most intuitive for virtually everyone. Everybody understands that if you do not enjoy a nice credit score, you're not going to enjoy a nice mortgage rate. For example, the lower your credit score, the higher your rate. That's just the way, unfortunately, the way it works, right? We do everything we can to try to improve your scores before you're applying for the mortgage. So that's going to involve a couple of months of pre-work that I can help you with. So don't worry, I've got your back there. In fact, there's a companion video right here that you can watch after this on how to improve your credit scores quickly, where I show you some great ninja tricks. But let's show you an example of what that's going to look like as far as improving rates. For example, right now we're in the month of May of 2025. In a conventional loan, let's take an example of a conventional loan on a $300,000 purchase. On a 660 score, which is pretty average, your principal and interest is going to be about $18,050. And your interest over the accumulated lifetime is going to be about $380,000 worth of accumulated interest. That's a lot of interest, my friends. Now, if we can improve your score from 660 to 740 in a matter of a couple of months maybe, we're going to chop off 0.5% from 6.75 to 6.25 by increasing your credit scores from 660 to 740. And what is that going to do to your payment? Well, it's going to reduce it by about $90 to about $1,760. And your overall interest over the 30-year life period will be $346,000. So you're going to save about $34,000 or more in total interest, which is not bad over the course of a lifetime. And guess what? You're going to benefit twice from having your increased scores, because not only do you get a lower monthly payment of about $90, but your MIP, your mortgage insurance premium, also drops by about $75. So the overall impact from going from 660 to 740 by improving your scores is going to drop your payment by a total of about $165. That's nothing to sneeze at, my friends. Well, let's go into the second reason. So the second very big factor involving trying to get the very lowest mortgage interest rate is you've got to be able to shop the rates. I mean, this is a giant purchase, right? It's going to be the biggest purchase of your life, more than likely, is your home. And so you've got to be able to shop it. And so I'm going to make a distinction between two different types of institutions. You have direct lenders and you have mortgage brokers, and the two are not the same. A direct lender is a firm that the actual money comes from that institution to fund the loan. So think, for example, Wells Fargo, some of these big banks, Chase, for example, whereas a mortgage broker like myself is able to shop different lenders. So if you come to me, for example, I have access to about 150 different lenders across the country, direct lenders. And they always have deals going on, or they always have better deals than the big banks. Friends do not let friends shop at the big banks. Why? Because you can't go to Chase, for example, walk into the lobby, say you want a mortgage loan, and say, okay, can you shop those rates for me? They're going to look at you crazy, like, hey, pal, we only have one rate. This is our mortgage rate given your FICO scores. Whereas I can shop across all these platforms here that you see, all these different lenders for the best rate and the best service. And if they have any incentives going on, even better. So just like you would shop at insurance agent to be able to look across different insurance carriers, you use a mortgage broker like myself to be able to shop across the platform of direct lenders. Hopefully that makes sense, but you've got to be able to have that ability to negotiate and shop. The third big factor in determining, trying to get the lowest possible mortgage interest rate is the use of buy downs. So what are we talking about here? We're talking about the borrower, the buyer, you, enjoying a lower than prevailing rate by spending money for it. It's called buying it down. So you pay discount points, and there are different terms for these things. There's a 3-2-1 buy down, a 2-1 buy down, there's a permanent buy down. I'll give you an example of a 2-1 buy down. So let's go back to our previous example of a $300,000 purchase, 95% conventional loan, 740 score. That rate right now you would enjoy would be about 6.25. Well, I'm not sure you'd enjoy that, but that would be the prevailing rate. In a 2-1 buy down, your first year you go down 2% below the prevailing market. So you would receive for your first year, you'd only be paying 4.25. Nice deal. The second year would go up 1 to 5.25%, and you'd pay 5.25% interest rate for the second year. And then the remaining 28 years, we'd be back to the 6.25 that you started off with. So 4.25, 5.25, and 6.25 stepping up in a 2-1 buy down. For a $300,000 purchase, what does that buy down cost? It's not cheap, about $6,400 right now. So you can pay for that yourself. You can negotiate that with the seller concessions. I can help you with that, and I'll be happy to do just that because you want to use buy downs if you can. And so that last prevailing factor on how to really get your mortgage rate as low as possible is the following. Well, guess what? Commissions are negotiable. In the lender world, when you do a mortgage, commissions are negotiable. Doesn't matter what the banks say, they're going to tell you that's not. They have a set fee. Oh, I'm sorry, that's our policy. We don't provide discounts. They do. You just got to hammer them hard, and I can do that for you because that's why we have a lender platform to shop from. But from my perspective, I can also pare back my own commissions and try to give you the best deal. That might look like being maybe an eighth of a point difference in the rate, which would be great, or maybe extending to you some kind of credit, $500 to maybe $1,500, whatever it is, depending on the loan size and the conditions. I'm going to do my best to just drive the best deal. So that means that if you employ me, and I'm hoping you do, of course, that I'm going to do 4 things for you. I'm going to increase your credit scores so you get the lowest rate and you reduce your mortgage insurance premium. We're going to shop the heck out of my lender platform of over 150 lenders. We're going to employ the use of buy downs, 2-1 buy downs, 3-2-1 buy downs, whatever makes sense. And lastly, of course, I'll be looking to cut commissions where appropriate and possible to just drive the best deal for you. So I'm hoping all that's going to work out. Please call me or contact me at 210-317-6514. I'm the Mortgage Patriot, Kevin Fagan, on your side. Make it a great one.